Welcome to Yellow Tunnel. No good pronunciation. All right, thanks. Welcome to Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, answer any questions you might have about your subscription, or talk about signals and how to use Yellow Tunnel to find signals in the market and how to take advantage of these signals. For those of you who are new, I see a lot of new names, so I'm super excited. Thank you for joining. Everybody who is new, welcome. How many of you are new? If this is your first live event, do me a favor, type in first. I know Larry, Lewis, Chuck, Thomas, Vito is here, but Volney and Irv, let me know if first time, Irv, perfect. So for those of you who are new, welcome first of all. And the main difference between Yellow Tunnel and maybe some of the other services out there is that my background is technology. I'm not a market maker. I'm not a ex-professional trader. I was a CTO of several fintech companies in the hedge fund world or broker-dealer world, like Options Express, that went public. And then after they went public, I decided to manage my own money. And I built a team of engineers, financial engineers that have experience in modeling and neural networks and artificial intelligence. And we're building these models to find signals in the market, find opportunities in the market, but also trade these signals. And we have a morning bell and a closing bell every day. And between Keith and myself, we have over 50 years of experience. So that's the difference. Disclosures are also very important. Please read them. I'm going to go through specific trade ideas, right, using stock option trades. It involves risk, so it's very important to talk about risk. So if this is the first time, your first event, or if you haven't seen these disclosures, I encourage you to visit the link on your screen. You can always pause the screen to read the remaining of the disclosures. But the main point is that I'm not an advisor. I'm here to show you what I do in my own portfolio based on my own risk tolerance level for general education and information purposes only. All right, before we jump into trading psychology and trading plan and importance of trading plan, let's look at the market. So first, I'm looking at the aggressive power trader, right? We have different services, and the way it works, a model runs every day and provides predictions, right? So in this example, the model runs and basically generates signals. We have different models that generate signals that basically says, for today, consider buying Fortinet, consider buying Morgan Stanley, consider buying Capital One Financial. Then you look at this information, and basically, if you don't have exposure, let's say, to credit cards, maybe Capital One Financial or Discover Financial. If you don't have any exposure to technology, maybe Fortinet. If you don't have any exposure to financial or investment banking, then maybe Morgan Stanley. It gives you specific entry point and exit point, right? So it basically says, what the range the stock could be trading at 127, consider buying, at 130, consider selling. Same thing for spiders, right? It basically says long term, we're still in uptrend. We could be as high as 600 level. Short term, actually, the model is very bullish, but longer term trend could be there at 600, 610. We're already at 600, right, after the elections. So you buy at 590 and you sell at 596. Right now, we're actually trading, assuming this is still it's delayed. Let's look at the market. It's trading at 598, right? So market is already at 600 after the elections because that uncertainty is removed. People are bullish, right? Red wave. Their lower interest rate, lower taxes on corporates, and you see kind of a broad-based rally. And spiders is already at 600. So that's what the model basically tells you. So you buy at 590, at 596, 97, consider selling. We're already at 598. We looked in the morning in the live training room, we look at the exposure. Right now I'm looking at the gamma exposure. Gamma exposure basically tells you at which levels, at which strikes or level, there's a lot of open interest, right, and a lot of gamma. So right now you can see largest gamma is at 600. So we're gravitating towards 600, and probably at some point we need some kind of other positive news to break through the 600 level. Same thing was at 590, right? We had elections. I said, sell 590 until we have elections, we break through this level. Once you break through this level, then, the next level is 600. So there's a lot of overhead at 600. But if you look at the one standard deviation move based on supply and demand for options, right? Expected move for November 15, expected move for end of the year, somewhere between 602 and 614, right? Is where you can expect, if the bullish momentum continues, you can expect that the stock market could reach 610, 615 level, right? This is what information tells you, one standard deviation move. If we have negative news, right? I don't know what they would be, but maybe some geopolitical risk, right? Maybe escalation of conflict in the Middle East, maybe some other, maybe recessionary pressure, maybe a CPI data next week is going to come in harder than expected. Then you could be at 580, 590 level on the downside. So I think that's where the market is trading until the end of the year, somewhere between 580 and 615, right? We already broke through the uptrend. Usually I wait 3 days. The uptrend is confirmed, and we're already not that far from 610, is 2% away. On the downside, the breakout is 586. I would watch 586, and obviously in terms of high open interest, 590, 586, and then 580. So I think the 580 is kind of the move to the downside. So I think we have 3 scenarios going into the end of the year. Well, probably more, but at least based on one standard deviation move, right? Scenario number 1, the gamma exposure doesn't tell you which direction the stock is going, right? Our model tells you we're bullish and the trend is up. But the estimated move doesn't tell you which direction. So we could revisit 500-day moving average, maybe close the gap, elections gap. Scenario number 1. Scenario number 2, just like one standard deviation move, is 615, right? So we reach somewhere between 610 and 615, right? That's scenario number 2. Right, scenario number 1 will drop, and then you can have 2 standard deviation moves, right? If there is any negative news that's beyond what people expect, right? Maybe CPI is going to come in much harder than expected. Maybe the next unemployment data in December is going to be much harder than expected. Then we could do 2 standard deviation move, right? Instead of moving 20 points, we might be moving 40 points, right? Somewhere 560, 565 is the next major support level, right? That would be scenario number 3. Right, kind of 2 standard deviation move, and scenario number 4, 2 moves to the upside, right? 630, right, as high as 630. So you have 4 of these scenarios, right? On one hand, we could close or touch 50-day moving average. On the other hand, we could make new highs, 615, and and then we can have more exaggerated moves. So let's think about these 3 scenarios. Larry, welcome back. Chuck, Irv, Larry, Lewis, Thomas, Tony, Trader, Vita, Volny, welcome back. So what do you guys think? And plus you have to consider seasonality. We are going into the seasonality, which is usually bullish. When you look at November, December, usually seasonality is bullish. So how many of you think scenario number 2, we're going to reach 615? We're already at 600. So we're going to get to 610.15. Scenario number 2, we get to the 575, 580 level, right? So scenario 1, we're at 580 level. Scenario 2, we're at 615. 3 and 4, kind of 2 standard deviation because we have some kind of a event. Chuck, Irv, Kevin, Larry, Lewis, Thomas, Tony, Larry, Vita, Volny. Anyone for one? This is way too quickly. One of the concerns is that Trump administration will raise tariffs across the board, right? That should be deglobalization. That will be inflationary, and inflation is back. Interest rates are high. We got to all the way to 4.5%. What's the next step, right? And that could be, that could be bearish. right? That's one. Two, passive list resistance, higher highs, higher lows, Christmas rally, interest rates dropping, yield is dropping. NVIDIA earnings is going to hit a home run in the next week or so, and so on and so forth. Larry, trend is up, so I'm going to assume 2 or 4. Thank you, Larry. Anyone else? Tony, Vito, sorry if I mispronounce, Kevin, Irv, Chuck, Thomas, 2. Okay, I'm going to go with 2 too, right? I think the passive list resistance is to the upside. We've been above this level for 3 days. The breakout is confirmed. I think it's a passive list resistance is to continue going higher, assuming there's no outlier event, right? 3 and 4, 2 standard deviation move between now and end of the year. I would say you need some kind of a positive catalyst. It could be NVIDIA, right? Maybe NVIDIA is going to hit a home run and it's going to be up 20%. That could bring the market to 630, right? Scenario number 4, maybe, you know, well, Trump doesn't start in January, so I don't know what, but he might say, you know, in January or February, I'm going to raise China interest, you know, tariffs to 60%. It's going to happen, you know, February. It's an unlikely event that he will say something like this, but if he does, then, you know, that could, you know, have a short-term negative effect on the market. Yields have dropped after Powell's speech yesterday, basically lowering the interest rate, staying the course despite, you know, the election results. So that's positive. It's still an uptrend, short term. It's still, I think, in downtrend, long term. Right, short term, since September, it's an uptrend. If you look in the past year or so, it's in downtrend. So this is probably the most important chart. The most important chart is what's going to happen with interest rates. Because if the 10-year continues to go higher, then what's the explanation, right? The only reasonable explanation right now is tariffs, right? Tariffs and or CPI data comes in much harder than expected, right? We kind of have results of the elections, which is great. Sorry, economic calendar. But the next big data is CPI, right? We're going to have a CPI and PPI data, and that, you know, that could spark volatility, right? If the CPI and PPI is higher than expected, and we have Trump administration, which could be net inflationary, then we could continue going higher. And you can see flat, you know, the yield curve is flattening again. 2 years greater than 5 year, 2 years almost a 10-year. So kind of the opposite trade. So that's important to keep in mind. In terms of some of the Trump trades, obviously Bitcoin made new all-time highs after the elections and continues to trade higher 3 days in a row. So that breakout is confirmed in terms of Bitcoin. NVIDIA did break out 3 days in a row. It's trading above this level. So Bitcoin is up, breaking out. NVIDIA breaking out. In general, sectors like banks, whether it's, you know, JP Morgan's of the world or Wells Fargo of the world, right? Or investment banking, Morgan Stanley, right? BK, they're all have the strong momentum to the upside. Also industrials, right? Because the idea that you know, Trump administration is going to be better for industrials and banks, less regulations, and you see industrials also break out at new all-time highs. And these are your American Airlines of the world, right? American Airlines of the world, you know, kind of a vertical move up. Jets in general has been, you know, in a strong uptrend, trading higher. What else? Materials, let's look at materials. So far underperforming at 50-day moving average, right? That's a head scratcher why materials are underperforming. Home builders are continue to underperform, right? Despite Trump. This is initially because of the interest rates. Now interest rates are dropping, but that's still an issue. China is down, right? You know, maybe tariffs, maybe the economy is, maybe the stimulus package wasn't big enough, right? The concern that the stimulus is not enough to move the needle now. It's less than expected. Maybe additional tariffs So FXI is up. VIX is down. That's positive. VIX is back to 15. We talked about industrials. That's the Trump trade. Continues to trade higher. Health, REITs and healthcare has been underperforming. So rotation out of the safety asset classes, risk on trade, meaning cyclicals, your banks and industrials, and your technology, right? High beta momentum stocks. Healthcare has been underperforming. Consumer discretionary has been outperforming, right? This is your Tesla of the world, right? One of the biggest beneficiaries in terms of price action. Kind of this vertical move to the upside in Tesla. And that's the main earnings, the main sectors. So on yellow tunnel, we do have these short-term trades, right? So we provide you a signal, right? Let's say Morgan Stanley. We think it's an uptrend, right? It sees a huge momentum to the upside. Even long-term momentum is also at 131. We're already at 131. And if you look at Morgan Stanley, it basically says at 27 is consider buying, at 130 consider selling if you want to initiate this position. So you can go into Morgan Stanley. I did the NVIDIA trade yesterday, right? If you saw in Profit Accelerator, if you're following, this is where not only we have signals, but I actually trade them. So you can go to orders and actually see that, I closed NVIDIA, right? I closed SH. So I closed the NVIDIA trade. And for the Morgan Stanley, let's just look at the Morgan Stanley again. Support is 127, overhead resistance is 130, right? So if you buy at 127, let's see how did the market open today. So usually we wait 15 minutes, right? So it was at 120, what was the suggested price? 127.04. So it actually did not. So open price was not at 127.04. So let's say it's 120, you wait and you wait till it, for the first 15 minutes, so let's say you entered at 128.78, right? So then you either can close it by the end of the day, right? If you're an aggressive short-term trader, right, day trader, then maybe you'll get out of the trade. If you want to carry a position, maybe you could say, okay, as long as it's above 127, I'm bullish on the market. I'm bullish on Morgan Stanley, and then you just buy Morgan Stanley stock. But these are the short-term signals. Some of them I trade. Some of them I don't, based on, if I don't have exposure to banks, maybe I'll buy Morgan Stanley. If I don't have exposure to consumer discretionary, maybe I'll buy Capital One Financial or Discover Financial. If I already have the exposure, then I won't, right? So you have these signals. We give you suggested buy and sell entry points, and then long-term trends. You can always go to AI analysis, type in, any stocks, and actually look at the prediction that we have for any of these stocks. And we do have live trading room recordings. So if you're not sure how to trade, we have strategy roundtable recordings here. We have trading room recordings, right? You can look at the live trading room recordings for every session that we're doing. And we also have recording active workshops, right? If you want to learn about options, you're not sure what the options are, Tradespoon is, managing both companies. So we have different webinars on options trading, right? And you can look at these recordings from option trading. So I encourage you to watch the recordings of live trading room workshops. If you need to understand technical analysis or options or stock trading, you can find that here. We have history of all the signals, right? You can go in every day and see what the signals were. And, we do suggest you, if you're not comfortable trading stock, you can trade options, weekly options, or if there's no weekly options, then we'll have monthly or daily options. So that's aggressive power trader. Any questions on aggressive power trader? Perfect, thank you. Then we have weekly power trader, similar approach as aggressive power trader, but these are just different model, and the signals are not meant to be day trading or short-term trading. This is meant to be you buy and hold. Let's say BK key, right? You on Monday, right? The signal is generated every Monday, and then let's say you don't have any exposure to financial companies, right? And you want to trade financial, you come in on Monday, and then you make a decision. Do I want, maybe before the election they could go other way, then you won't buy it. But if you're bullish on the market and you think exposure to banks makes sense, then you buy it. And I mean, obviously in this case there was a strong rally because of the elections results. So that would be weekly power trader. Same thing. Some of these signals I trade, like BK, I think it was actually one of my trades. So you can always see what I actually personally traded, right? What prices I get in, right? What buy prices I got out. And you can watch the recordings, right? Every day I explain how to manage position and I review position size. The most important from the trading psychology point of view, right? And this is one of the reasons I built Yellow Tunnel, because of the idea of position sizing, right? And I explained that at length in the recordings, right? You shouldn't always buy one contract. You shouldn't always buy 100, shares or $100 worth of something. You should always look at how much money are you willing to risk, right? And you can look at the different tools, like this gamma exposure tools can tell you how much risk, what is the worst case scenario, 1 standard deviation move, 2 standard deviation move. You can look at our support and resistance levels, right, using our portfolio. So that's weekly power trader, right? We also have, I touch base on profit accelerator. Profit accelerator is not the signals, it's the signals that I actually trade, right? So aggressive trader and weekly trader, these are the symbols that, AI models are generating. But profit accelerator is actually my trades, right? So if you want to see what I traded, NVIDIA, SH, or other stocks, then this is something you would see. What else did I trade? This NVIDIA, Bank of New York, ExxonMobil, right? So these are some of the trades that I closed and traded this week. And aggressive power trader is only option trading. Same thing with dynamic power trader. It's a mixture of option and stock trading, right? Some people are not comfortable with options, so you gravitate toward profit accelerator. But if you want to know some of the option trades, I also traded Meta this week, right? I bought 535 call, sold 540 call, and I closed it for, almost maximum profit. So you have a combination of stock and option trades, and you can find that in the dynamic power trader. And then finally, earnings power trader. Right? Earnings power trader is where I trade earnings. So this week I traded Palantir, right? And actually did 2 examples. And the idea of Palantir and some of these earnings strategies, right? Sometimes you want to be long the volatility, sometimes you want to be short the volatility, right? So if you look at the barbell investing, right? The idea of barbell investing is that you take small percentage of your portfolio, right? You can put it in aggressive stock market, or you can do it in the bond market. Or the idea is you also could take small percentage of your portfolio, 5 to 10%, to invest them into this lower probability trade, but with a higher return on capital, right? In this example, well, the butterfly, the call butterfly, I bought at 26 cents, right? And I closed it at 95 cents, right? So you buy, I did calls and puts, so I bought something for 60 cents, sold it for 95. I bought calls and put butterfly and was able to make 50% return. But the stock had to move, Palantir had to move significantly, right? And I also broke the trade, and that was a losing trade. But the butterfly, the trade itself was successful, but it required this 2 standard deviation move, right? So Palantir just continues to go higher, right? From 40, we're already at $60, right? So this Pelletier continues, the momentum continues to go to the upside. So that's example of aggressive power trade, earnings power trader, where I trade option strategy. Sometimes I'm long volatility, I would do maybe debit spread or a butterfly, or sometimes I'm short volatility, I would do a credit, iron condor, or credit call spread, credit put spread. So that's example of Pelletier trades and earnings power trader. So those are all the paid services: aggressive power trader, weekly power trader, dynamic, and earnings power trader. I do encourage you to participate in live trading room. We talk about trading psychology a lot, how important it is to have a trading plan. You want to treat trading as a business where you have, a trading plan, written down rules, right? You have written down rules where you document them and you treat them as a business and you follow them, right? We have rules. You have operating agreement for the business. You have rules about how much money you can raise. Trading is the same way. You should have rules in terms of how much cash you have, right? So these rules are how much cash you have, and then portfolio drawdown. This is where the rule of 4 positions at 2.5% comes in play, right? And all of these services, we basically say, if you need to yellow tunnel, please have 4 positions, active position at a time with maximum exposure of 2.5% of account value per position, because you want to control your drawdown. 4 times 2.5 is 10%. If this is a false breakout and market reverses on some negative news, market could be down 5–10%. So you want to limit your exposure to less than 10%. The goal is to become long-term disciplined trader, right? It does require time commitment, repetition. You want to write down these rules, and you want to have a checklist where in the journal, you actually write down every trade you make, right, in the journal. So I encourage you to do that. And then before you place the trade, you go through that checklist, and if any of the rules you break, you don't want to place a trade, right? You want to make sure that you don't break any rules and you have a checklist. And you should try to do this in writing. It would help your performance results significantly. So that's trading psychology, right? We talked about idea of the economy of control. Usually that means you don't really, most people did not think that there'll be a red wave, right? Most people thought that this, House will be flipped, Senate will be and House will be red and President will be blue, or vice versa, right? It looks like we're gonna, I don't know if the results are already in on the House. So President, Senate is red, and House is, they still need 7 more. There's still 7 more seats. I think Democrats have to flip 4 seats. So far, they lost 2 seats. So let's assume that that stays this way, and Republicans have control of all the branches of the government. Then most people did not anticipate that. Most people did not think there will be a red wave, right? Everybody says, based on polls, very close, tight race, it's a flip coin, right? Everybody thought that we're not going to have the results until Thursday or Saturday. So that is a great example where you can really control the results of the elections, but you can control the size of your portfolio, right? You can concentrate on things that you have within your control. Journal, trading plan, participate in live trading room, have 4 positions, do not exceed more than 2.5% of your portfolio per position, and repetition, right? It takes time, practice to internalize these concepts, right? It's great to be in a 1-hour webinar, but unless you practice it and do it over and over again, you're not going to internalize this information. We do have one-on-one coaching. If you're interested in one-on-one coaching, we do have that. You can find the link here in our coaching. So consider coaching. That's time commitment and money commitment. So if you don't have time for that or money, then I would encourage you to try any of these services. You get 30 days money back guarantee, so risk is risk-free. You're gonna get 30 days of free education, kind of the worst case scenario. And then you can participate live in these live trading rooms, or you can watch the recordings, right? So that's what I would encourage you to do. Positive, negative visualization, right? Usually when you start trading, from psychology point of view, you don't really like to think about negative. A lot of actually comments I get during this webinar, Vlad, why do you think about that the market is going to sell off 10% or 5%, right? Elections are out, earnings are shown, NVIDIA is going to breaking out, Bitcoin is breaking out. There's only one direction. But in reality, there's two directions, right? There's direction up or there's direction down or sideways. So you always have to look at these negative visualization, kind of like what we did in the beginning of the session for any trade that you make, to basically say how much money am I willing to risk, and if the trade goes against me, will I be okay with it, right? From psychology point of view. Because if you're overly exposed on your position size, right, the only reaction you usually have is where your blood pressure goes up, you get nervous, discouraged, and then usually you capitulate at the end of the sell-off, right? The only way you don't capitulate at the end of the sell-off if you know what your drawdown of your portfolio is. Because when the portfolio is down more than 20%, even if you're a professional trader, you're going to make emotional decisions, right? Because it's hard-earned money. And if you're down 20%, it's a problem. So the goal is to be not down 20%. That should be the number one goal. The goal is risk and doing these positive and negative visualization. Yes, Bitcoin is great. Yes, it's going to, 100,000, right? That's the next call that everybody's make. But it doesn't have to, right? There is no 100% certainty that it will hit 100,000. Maybe it's the path of least resistance. Maybe because of this breakout, you should consider going long, but it could be a false breakout and it could drop back to 68,000 or 64,000, right? So if it does break below 64, reaches 64, 68, the goal is not to be down more than 2.5% of your portfolio. Because if you're going to be down more than 2.5% of your portfolio, you can see Bitcoin is a very volatile asset class that can move a lot in both directions. So that would be my thought process on fight or flight. Game theory, right? It doesn't matter what Vlad thinks where the stock market is going. It doesn't matter what Larry thinks where the market is going. What matters is what majority of the people think, right? What majority of the people think about interest rates, about earnings consistency, good earnings results. So that's very important, right? So I spend a lot of time researching, looking at the research reports. Macro, I'm very into macroeconomic. You can see I follow interest rates, dollar. I think they're extremely important to make some of these decisions. And it's all about compounding investment, right? It's great to invest 60 cents and make 95 cents on the next day. That's great, but that doesn't happen. It happens less than 50% of the time, right? If I can able to invest 60 cents and make 95 cents more than 50% of the time, then I wouldn't be here, right? So the probability of these trades is less. So your goal is to make sure that the aggregate of successful trades are higher than the aggregate of unsuccessful trades. So that requires compounding investment. All right, any questions? I know I've been talking a lot. We have a lot of people today. I appreciate this. Olga, welcome. Daniela joined. Kevin, Larry, Lewis. We have a few new people, few stayed. How to use it? Is it available on Yellow Tunnel? So gamma exposure is not available on Yellow Tunnel, not yet at least. It is available on bar chart. You can open up a free account and it should be available. Just go to gamma exposure. But gamma exposure basically shows you levels where market makers need to hedge their risk. What does that mean? That there is a high open interest, right, at these levels. So right now, this bar means, first thing I will try to understand open interest, right? Every time you buy an option, like let's say the strike price, 615, right? That's the highest bar. Every time you buy to open or sell to open, every time you open up an option position, at this strike price, this bar is getting bigger. Right now, the call open interest is 125,000 and put open interest is very low. So you have 125,000 contracts of spiders at that level. So that means market makers have to provide liquidity for that. So the idea is that once it reaches 615 or 610, market makers will have to sell their stock positions in most of the cases, or in this specific case. So gamma exposure basically shows you one is one standard deviation move based on supply and demand, based on implied volatility for options data. Right now, option market maker thinks by the end of the year, we will close actually, so the upper range is somewhere between 614 and 518. This is the range where you should expect that the market will trade between now and end of the year, right? On the positive news, we'll get to 615. On the negative news, we could get as low as 580, right? And if we don't have positive or negative news, then we'll just trade in this range between 590 and 605 or something like that. Larry, thank you for the question. Cash secured put, Chuck sells cash secured put. So if you do have a larger account and you want to own 100 shares of NVIDIA, I mean, obviously Chuck has more than average account size, right? So this is great. But just keep in mind that 100 shares of NVIDIA is $14,000, right? And if you have $10,000 portfolio, you don't want to spend, you know, $14,000 buying NVIDIA. So this is specifically for larger investors. But you know, you could do bullish, you can do cash secured put, or you can do debit call spread, right? Or you can do credit put spread. All of them are bullish strategies. It's just Chuck doesn't have to be correct on time. He doesn't mind owning 100 shares of NVIDIA, right? Because he can sell calls against it, he can collect dividend. But if you do purely option strategies, then time is against you, right? Time is not on your side. So we do have NVIDIA earnings. So let's do end of the year. So let's try it again. Is it just NVIDIA or is it not? Olga, happy to see you in the channel. Have you sign up again? Olga, yeah, I still have a trade spoon. Welcome back. Yes, please sign up. Yeah, we do still have trade spoons, still have yellow tunnel. We're still doing this. I'm glad you were able to join again. Yeah, so something is happening. Oh, it actually did. So it just took a while. Let's see, show expected move. Okay, sorry. So just was busy. So two standard deviation. Well, I do have to select the strike prices. Let's see. Okay, good. So it's trading at 423 by November 22nd. That's, I think, after the earnings. The expected move is 4%. That does not make sense. Is this NVIDIA? Oh, this is Microsoft. Sorry, this is Microsoft. I know 4% is not reasonable for NVIDIA, so let's switch to NVIDIA. I think NVIDIA is okay. So one standard deviation move is 135. right? You see very high open interest. If I go through this 135 strike, if I hover over 135 strike, 47 million of net gamma exposure, right? So market makers have $47 million worth of exposure at that strike. So you know that any positive news, any negative news, and it will gravitate toward 135. If they have hit a home run on the positive news, 160. This is where you have high open interest. So 135 is basically if you want to take the risk of earnings, right? Because NVIDIA, it could be, it could move two standard deviation. Like we've seen ARM, I don't think it moved 4%. I mean, 2 standard deviation, but it moved at least 1 standard deviation. Now it's actually kind of flat. But we have SMSCI. That's not earnings. They have issues with accounting and earnings, right? Both. So you have this exaggerated move. ASML, right? You have a sharp, pullback on earnings. And you have Pelletier, right? So it could move 2 standard deviation up. It could move 2 standard deviation down. Those are extreme cases. But without extreme case, 135, right? So you can sell, let's see, vertical spread, naked put, right? Cash secured put. Let's say you want to go into December, right? And you say, Vlad, I don't mind owning 100 shares at 135. I don't want to own it at 147, but I do want to own it at 135. So 135 bid is $4.20, right? So you can generate 3% on that short put. And it gives you annual return, percentage return, delta, out of the money probability. So 70% probability, right? That's what we said, 1 standard deviation. So 70% of the time, it will not reach 135. 30% of the time, it will reach 135 and you'll get assigned, right? And you can look at the potential return for the strategy, 3%, and annualized 27%. If you do it like Chuck, just every month or every 2 months, keep selling the short put. Very popular strategy. I still encourage you, if you have smaller portfolio, then you just do vertical spread. You can say, Vlad, my portfolio is smaller. I don't want to take that risk. I'm going to go to December expiration. I'll select 135 strike, apply. That's November 8th. Let's do 1220. It's the speed test. Let's see if I can log in again to Barker. Maybe it's will work faster. Sorry, I'm just trying to figure out why it's not. Let's see, spiders, show chart. That's pretty fast. But NVIDIA, see clear network. That's the initial load. Okay, that's fast. Okay, sorry about that. All right. Thank you, Olga, for your operative and public finance. Got it, Kevin. All right, guys, that's all I have for today. You've been wonderful. Thank you very much. Consider signing up for one-on-one coaching. So consider, based on your trading style, consider signing up for any of these services. For the paid services, we do have 30-day money-back guarantee if you sign up for any of these services. And I will see you next Friday. We'll do the same thing. We actually had a pretty good turnout this time, Friday at 12 o'clock. We'll do it again next week. Thank you very much. It's based on recommended trade signals. Larry, the best signals, option signals based on the recommended signals, I would do dynamic power trader because this is what I actually trade in my own account, right? So that would be the place. I mean, all of the weekly and option, we do give you just, it's always at the money option. You can, if you're trading single option, you can always say, okay, I'm just gonna do either the weeklies or the monthlies, you know, in the money call, delta 70, delta 60 call. But if you want to, you know, but these are just signals and automatically option strategies generated. But if you need some hand holding and help, I would sign up for dynamic power trader because then you can see my trades. Do you normally go over $5, Stan? Chuck, it's again the risk, right? If you do $5 in one contract, then your risk is only $500 minus the credit. If you do $10, so on the cash secured put, if you have a larger account, you can take more risk than maybe you do $10, right, for a $100 stock. You know, if you're a smaller account and you don't want to take the risk, then you do $5, but then your return on capital changes, right? They're inversely correlated, right? Olga, thank you very much. You have the most amazing, the rest of the trade as well. Thank you, everybody, and I'll see you soon. Have a great weekend.